Good morning, guys. Hope all of you guys are well. Today is May 17th, Friday, and one of the companies that showed up on the radar is Chewy. Now, Chewy is an online pet store. So, for those of you that don't know, they sell pet food, pet medicines, and pet toys online. They've been doing that since 2007. The company was started by one of the guys who then became the chairman and the board member of GME. So you probably know him from that standpoint. But since 2017, or 16 actually, the CEO of the company, Sumit Singh, an ex-Amazon employee, has been running it and running it very, very effectively. They've grown revenue, they've grown a lot of their customer base. And now the stock, although has taken quite a hit from the peak, that's because the growth that came from COVID. During COVID, a lot of people got new pets between 2020 and 2021. Number of pets being adopted by people, and also new pets that were gotten dramatically increased by 43% year on year. And then now has gone back to the 5 to 7% growth on an annualized basis, which is the sustainable growth. So because of that, Chewy went up dramatically and then came down dramatically as well. It's still building a base. It's built a very sustainable long-term model which differentiates itself in this space versus an Amazon or versus any of the other competitors that are offline, such as Petco and PetSmart and others. So they do have competitors on the offline side in real life stores, such as Petco, PetSmart, and a few others that are regional. But online, their biggest competition probably is going to be, to a certain extent, Amazon, but Amazon sells a lot of the food, whereas Chewy differentiates itself with pharmacy and health products as well. And the second competition is Bark, B-A-R-K, company that went public by a SPAC. They're struggling. So I think the real competition, a lot of people are going to complain, is going to be Amazon, which is why cannot Amazon do what Chewy does? And very similar to Wayfair that we covered a few days ago, they have built a lot of good differentiation within the organization to be able to support long-term growth. So I think this does fairly well. Let's take a look at the company, see what's good, what's not good. They're the largest specialty pet retailer in the United States by revenue, by number of customers, number of active ship customers. Now, one of the things that pet owners do, very similar to a lot of people, is they buy stuff and then they keep buying every month or 2 months that they need for food and medical supplies and other supplies that they might need for their pets, including toys. Some people buy toys on a monthly basis. I have a pet as well. We don't buy toys for him every month, but we buy most of our stuff from Costco, not necessarily from Chewy, but Chewy does a very good job of being able to get some of the customers and keep them for a long-term basis. They're the largest pet pharmacy as well. Most of the pharmacy business right now in the United States is mostly with a lot of people who are veterinarians, regional mom and pop stores in a lot of different places. Auto ship is when you go and buy a certain kind of food or certain kind of toy or certain kind of treat for your dog, and it ships every month or on a frequent enough basis. As a percentage of their sales, 75% of their customers buy via auto ship. That means they keep buying every month or every so frequently. They've built some of the strongest direct-to-consumer network in terms of fulfillment centers with 18 different locations, fulfillment centers where they ship directly to their customers. And experience-wise, they're one of the strongest. Now, pets overall is a fairly resilient category. Most people know pets only from a dog or maybe from a cat perspective, but really pets spans a lot of different things, including rabbits and lizards and birds of other kinds. Food supplies itself, the overall pet market is a little over $120 billion annually within the US alone. Food and pet supplies, which includes treats and toys, is about an $80-90 billion market, about 60% of the overall. 144 billion total. 89 billion to 90 billion is nearly food and pet supplies. Pet health is about nearly $50 billion market, about 33% of it. And then pet services such as grooming is another 10 billion. Now, most of these is very, very fragmented. During COVID, it dramatically increased by 10% to 10% growth year on year from 2020 to 2023. And now it's come back to the 5 to 7% growth, which is annualized. It's really going down a little bit more because a lot of people that bought it now have to be able to absorb the incoming amount of adoption. The pet market is shifting more online as well. The reason why it's shifting online, number one, what you'll find is that the pet chains are the ones that are losing the market share quite a bit. and a lot of more grocery stores where people would go typically and buy some of their food and also buy food for their pets or treats for their pets. That's also shrinking. So you can see from this, the reason why it's shrinking, to be very clear, is twofold. Let me just highlight that. So this has shrunk, mass food and market grocery stores and specialty chains is also shrinking. The reason why it's shrinking is convenience. Number one, number two, and number three. It's just, even though the pricing is a little bit more expensive that you might get online, it's competitive, not that much more expensive, but it is slightly more expensive. But the convenience of being able to get something at home, making sure that the pet is used to a certain kind of food. Now, I've had my pet now for about 4 years as well. It was a COVID dog. And we find that the dog gets a little bit finicky when it tries to be able to, when you try to change the food that it eats on a daily basis. They're a creature of habit. So you typically want to get the same kibbles, the same dry food, and the same wet food, which is meat in the evenings. In terms of treats, they're a lot less picky, but in terms of toys, they can take any toy and they'll probably rip all of them apart. Now, specialty chains used to do very well because you could actually take your dog in. Now, given that a lot of people are kind of trying to go back to work, the go back to work kind of an issue is becoming a big problem for a lot of people who adopted the pets during the COVID timeframe. It's becoming a lot more easier to be able to just order online, get it at home. Now, Chewy itself, when they went IPO, they were about a $3.5 billion revenue business. Today, they're more than three times that. Dramatic growth in revenue, good growth in gross margin as well, from a low of about 220%, 800 bips to about 28% gross margins. You really want to see it closer to the 30-40% range, but this is comparable to what a little bit less than what a Amazon does and much more than what a Walmart does. Adjusted EBITDA, they've done a good job as well. And auto ship customers have gone to now 75% of net sales. So think about it. Literally, it's a subscription business in some senses. 75% of their customers are just buying it on a monthly, weekly, or whatever cadence business. And net sales per customer has gone to about $543 customer dollars per year. This is annual, just to keep in mind. So roughly about $50 per month, 40 to $50 per month is what every customer is spending on their dog just on food and treats. In terms of active customers, they've doubled. So they've done 2x in terms of number of customers, grown dramatically in terms of overall revenue, just growing very, very well. This is the big cause of concern for a lot of people. The customer base has gone only 20%, even though their revenue has gone 100% up. That is because they're selling a lot more of the other products and services such as healthcare and treats to their existing customers. You want to be able to see that 20 million number. So overall, in the US, roughly about 63 million pets, households have pets. So up to 63 million, a third of them roughly are Chewy customers anyway. So what is the big advantage that Chewy offers? Number one is convenience. They have the scale and the assortment at competitive enough prices. As I mentioned, it is a little bit more expensive, but not that dramatically more expensive. They also differentiate by means of healthcare. So Amazon does not have that in terms of services available to be able to help you get a vet or a simple checkup or even a virtual checkup. Amazon is still trying to figure out how to do it with people, let alone with pets. Chewy's done a very good job. And then the auto ship drives a lot of loyalty. Once you start buying it, it becomes convenient. You don't want to change stuff as well. Chewy, like Amazon and others, is also known for very good customer service. They really take care of their pet owners. They send them birthday cards. They send them other bereavement cards if the pet passes away. So they've done a very, very good job. Really, Petco acquired Chewy and then spun it out again. And now WOOF, WOF, OOF is the ticker symbol. You'll find that they compete on a lot of bases, but Chewy overall, from a differentiated offering standpoint, other e-commerce companies or specialty pet stores, they just do a much better job in capturing more money from the customer. So they become a trusted advisor to almost, as I said, 20 million customers that buy from Chewy on an ongoing basis. 30% of their customers actually support purchase recommendations completely. What Chewy recommends, they just pick that up and keep going forward from there. Now, Chewy has grown their healthcare business very well. So pets, you need to be able to provide this end-to-end solution: food, treats, toys, healthcare, which is the ability to be able to make sure that you can have more people do virtual consultations or in-place consultations. So on the other side, they built a marketplace where they've had a lot of healthcare providers sign up for the platform. So if you want to take care of your dog, you can go to a local provider that is signed up via Chewy. So in terms of a customer journey, typically will purchase a simple amount of food, then they purchase medications such as fleas and ticks. They become an auto ship customer. They will sign up for the pet insurance, which is a service that they offer along with Lemonade, LMND. Then they'll go ahead and have supplements and switch to a vet diet food, which is specific to them, and then long-term customer management, which results in nearly 100% sales rate retention. 75% of customers are auto-ship customers is amazing. It's literally a subscription business, even though the margins are not that good. It's predictable revenue stream, let me put it that way. Very strong CAC and LTV. LTV is long-term value, so 3.8 times over 5 years, the initial amount of money spent to acquire the customer, and customer acquisition costs have started to reduce as the number of customers have started to go up as well, which is a good thing. Number one is just they've been advertising smart, which is to a certain extent useful, but more important, word of mouth seems to be working very well. So they have three primary ways: Chewy retail, which is food, healthcare, food, treats, and toys. 87 billion TAM, well-established engine. Chewy Health is their growth opportunity, 47 billion TAM, as I mentioned, growing very, very well and profitably as well. The big growth comes from international. Canada is their first movement, and they will try to move outside from there as well. So in terms of the healthcare itself, the things that they do, they provide food supplies, and sponsored ads as well to be able to support that business. This is for brands. Now, what they do from a health perspective is provide you a lot of content called Pet Med, just like WebMD, they have Pet MD. They provide a lot of content so you can very quickly go and find out what's wrong with your dog or your cat if something gets wrong. They also provide a lot of over-the-counter medications, fleas and tick stuff, or you can connect via telehealth. You can provide compounded medications as well. What that means is you might take a big dosage, break it down, or you might compound two medicines together and give that together. They provide insurance as well. So primarily about 68 million is the total number of pet owning households in the US. This 90 million includes a whole host of others who may be even sitting a dog or may have been taking it for a shorter amount of time. The active people that actually have a home pet is about 68 million is what I've seen from a lot of other different numbers. Now, they provide the ability to be able to give you all of this health related opportunity. On the flip side of the business, they've connected with about 30,000 veterinary clinics across the United States. So these customers come in, they come to Chewy, they want to connect with the veterinarian or with a system clinic, they can do that. And these veterinarians connect with Chewy as well by providing a practice management system, which is think of it like an ERP for veterinarians. They provide that as a service, as a software as a service that allows these veterinarians to come in and be able to manage their system through Chewy, which increases the amount of revenue that they get. Now, in terms of the availability and look for what the pet industry would do, they expect it to grow still in the 5 to 7% range. Unit growth is also in the similar range. Pricing growth has been very, very good. What I mean by good is because of inflation, pricing for pet food and also pet health has gone up nearly 15-20%. Insurance has gone up 30%. So that's been good for Chewy, but the overall industry is still a little bit of a challenge. In terms of breaking down the segments of customers, you'll find that most of the customers tend to be in the mainstream, which is looking for about 41 million, roughly about 41 million people is what they say. They think that the opportunity to drive awareness is very, very high over here. This is the big movement for them. The high-end customers typically tend to have their own private veterinarians and shows. The low-end customers, people like me, would probably go to a Costco. Chewy's big advantage is the mainstream shoppers. Now, versus the competition, basics, just availability, selection, pricing, and convenience is what you need to have. That's what Amazon does. That's what everybody else does. They mostly think they are on par with a lot of these guys. But the differentiator, number one, is healthcare. Not only the ability to be able to get patients, but also get the provider on the other side, the veterinarian, to use their private practice management system to log in to Chewy and be able to manage their business that way. The health value proposition overall. I'm not sure the customer service is a big differentiator. Amazon and most of these other guys now are pretty strong overall. It's a good growth market, pet health overall. It's about a $44 billion market, of which product sales is only about 18 billion. The veterinarian services, getting people to come in and do the work, is about another 25 billion, which is fairly good. And insurance itself, if you will, which is provided by Lemonade, is a $4 billion market growing fairly quickly. So that's very good. Chewy has been focused on product sales and insurance. They will get to eventually veterinarian services as well, but right now they do a marketplace solution for that. Okay, so what do they do? Chewy provides the ability within healthcare. They give you this portion already, insurance to a certain extent, content, which is PetMD, and then this portion is the B2B services managing veterinarians. So they don't do a good job of this yet. They do a very good job of these things and also getting insurance and content. Health sales has been roughly about 3 billion of the 11 billion. They're doing about 11 billion, as I said, about nearly 3 billion of that is health. related opportunities. Growth opportunity ahead is fairly good for Chewy overall. Roughly about $1 billion in terms of pharmacy itself is what they do, and growing fairly quickly. That market is expected to grow much faster. Only 20% or less of Chewy's active customers actually buying health-related services from the pharmacy. In terms of insurance, so we talked about pharmacy. The next is insurance. Insurance market is roughly about 4 billion, growing to about 7 billion on an annualized basis by 2027, and the insurance penetration is just about 3%. That's expected to grow to nearly 20%. They partner with Trupanion and they partner with Lemonade. Those are the two partners. So they sell insurance through these partners. Chewy is just a channel. They provide the end-to-end service. So a customer can come in, they can go to their pharmacy, they can go to the insurance, they can buy their food, they can buy their treats, they can buy their toys. The big three are really food, treats, and toys. And the rest of them are just add-ons that a lot of people tend to buy. Telehealth products. So this is the ability. So pharmacy was number one, insurance is number two, telehealth and health-related products is number three, compounding and others are part of the number one itself. So you can ask whether you want to chat with the veterinarian or you want to be able to do a virtual consultation. You can do that as well. Questions, advice, if there is a new pet that you're adopting, if you have questions about the food that you should be giving, all of that available via Chewy. Now, finally, content. You actually find a lot of veterinarians signing up to be able to provide videos, to be able to provide content, because it's a very good marketing source for them to be able to get their word out in front of a lot of customers. PetMD is like WebMD. Think of it very similar for people versus for pets. Drives a lot of traffic to Chewy overall. Now, Practice Hub, remember we talked about the B2B and the B2C side. On the B2B side, they allow veterinarians to buy the solution, which is a software as a service solution. It's an e-commerce solution included in it, allows veterinarians to be able to tap into the 20 million Chewy customers. And they don't have to keep their pharmacy capability and inventory and how they don't have to compound. They can just say, hey, this is the medicine that needs to go. They can immediately have it sent from Chewy directly. Makes it a lot more easier for them. And they also integrate via third-party systems. So Rhapsody is the name of the cloud-based practice information management system. They believe that it's better than the others. I've looked at a few of the others that are available in this system. They're pretty much the same. They mostly tend to be the same. The big advantage is Chewy started much later, so they provide a mobile access-based mechanism to be able to do that, integrated very seamlessly with the rest of the solutions. So good solution overall. Now, they're also looking to be able to open Chewy branded clinics that gives them the ability to be able to completely make sure that the customer has had a journey that is consistent with what they can do overall. So very, very good sales management through Chewy clinics themselves. So they're opening Chewy clinics. They've not done many of them yet. They're opening offline stores, very similar to Wayfair. They're actually trying to open offline stores. This will change the mix, I bet, in terms of the customer availability, but also changes a little bit the margin profile that is needed. So vet care itself, or Chewy clinics, essentially is a proof of concept clinic. They're launching about 4 or 5 of them this year, 2024. And the idea is to be able to be a specialty. Now, what has happened in the pet care industry overall from a health perspective is a lot of PE funds have started to buy out veterinarian services across the United States, which makes pricing go up much higher. That you'll see a lot of people have done that. Pricing has gone up much, much higher. So what Chewy is doing, they're trying to be able to build their own series of these across the board. So it'll be interesting to see where we go there. So when you get a new pet, all the way to food and treats, to when you celebrate your milestones, medications, and healthcare, to be able to find the food that you need as the pet ages, and then through the bereavement when the pet passes away. So essentially, that's the whole journey of the customer that they go through. Now, AutoShip itself, which is a very interesting solution, think of it very similar to what happens at Amazon and other places. You go, you, for example, want to be able to buy, let's say it's a cleaner product, you need one every 2 months, they will ship it to you automatically. They do that with food, they do that with treats, they do that even with toys. Park does that also, by the way. They've done a good job for each of the individual pet categories, and that essentially makes sure that the customer just continues to buy from them overall. AutoShip customers have now gone to about 75%. So 3/4 of their customers are buying from Chewy every single month or every single, I think close to about 2 months. Every quarter, 75% of their customers actually buy something from them. And they're very subscription based more than anything else. Now, the other part of it is they're diversifying their business. Big portion of their money comes still from retail, which is being able to sell food, toys, and treats. They get about 25, 28% margin, 20% margin on those. Healthcare, 30% margin. Now they're rolling out ads, which is more of an 80% margin profile. Paid placements within the product listing. So if someone is, for example, you have a certain kind of pet food that is new and you want to be able to make sure that customers know about it, you can actually advertise within that or sponsored brands with that. Very similar to Amazon in some senses. Now, the private label portfolio, this is the same thing you've seen in Wayfair. This is the same thing you've seen in Amazon with Amazon private label. They have a private label brand of food, which is American Journey, and they also have a private label brand of supplement food, which is called Vibeful. So both of these are expanding the care profile and the capability. They're still very small, relatively speaking, but the margin profile on this is 40% versus 20% from third-party providers. Now that they have the platform available, they have the ability for veterinarians to be able to do video messaging, messaging in a chat perspective. They take payments from their location management service. So they do end to end. One of the companies that went private after going public that competed with a lot of the providers was Rover, R-O-V-E-R. R-O-V-E-R was a stock. So they actually compete with Rover to a certain extent, but they also partner with them to be able to provide walker and sitter services in a lot of different locations. Outside of the US, Canada has a big potential. They think that Canadian market for the pet is about $10 billion TAM that they think they can go fairly well. Canada is overall fairly small. The number of pets in Canada in terms of households is about 9 million compared to, as you see, it's about 10 times that in the United States is the claim. Now, where they've really done a very good job is available from a fulfillment center perspective. They have availability in all the key locations. Now, really 100% of pet owners can get Chewy products within a day because of their fulfillment network. They have about 18 of those. When they started the IPO, they had about 9. They've nearly doubled that. Auto ship customers, seasonality, they have the ability to be able to efficiently make sure that every one of the products that are available. The other investment that they're making is in automation. Pick, pack, ship, completely done. At IPO, they had about 9 fulfillment centers, as I mentioned, double that, now about 18. Automated fulfillment centers, which is a new generation, they have about 5. So literally, when you have an auto ship customer, everything is done via robots. I'll show you a little bit of an example of what that looks like. They had about 2 pharmacies that they had set up, fulfillment center pharmacies. These are not actual pharmacy locations. Pharmacy locations, in terms of their fulfillment center, they have about 5 right now. Now, in terms of their availability, they have fulfillment centers, as we said, in 18 different locations. Now, 100% of their population can be got to in 2 days and about 80% in just 1 day. 1 day shipment, 2 day shipment, very, very good job overall. Now, there are 3 fulfillment centers that are completely AI based, leveraging it across their entire network. They can actually do auto ship from these locations. So it makes it much more easier to be able to go ahead and scale this at a margin profile that makes a lot more sense. Okay, just to wrap up again, gross margins are the 25-30% range, 25-28% range. The sales and marketing spend is about 13% is where they want to get to. Advertising is about 6 to 7%. They've been consistent with that. And adjusted EBIT margin at about 3%. They want to get to about 5 to 10%. Now, what they expect is the lot more push in the short term towards Chewy Health. Chewy Retail will continue as over, but the ads is the big focus there. And in the longer term, international rollout in terms of Canada is where the big push is. Can Chewy double from here? They're doing about 11 billion in revenue. I can easily see them getting to about 22 billion in revenue with a margin profile that hopefully goes up a little bit higher to the 28% range, 28 to 30% range. And that essentially means $22 billion and let's say 25% just to be safe. So $20 billion, 25% profile is about 5 billion on a so that's 5 billion in gross profit. And if you look at it from a net margin perspective, if you think about it about a 10% range, that's roughly about a 2 to 3 billion. So 2 to 3 billion with a 25 times margin to PE ratio gives them about roughly about $50 billion valuation for the company. That's where they could get to. And right now, their valuation is much, much lower than that. They're closer to the 12 billion to 15 billion range. We'll see that when we go through the numbers itself. So summarize, $150 billion opportunity. I think it's closer to about 90 billion. And about 90 million is their claim. Pet owners, they're really about 68 million. It's a completely integrated pet ecosystem. So the growth opportunity and availability is large. They're doing about 11 billion right now. They can easily get to 22 billion, at which point they should be a $50 billion market cap business overall, which is roughly about 3 to 5 times the current value that they are. Pet health is a big opportunity for them overall in terms of TAM. Auto ship is about 75%. They can get to about 80%, but I think that's probably where they're going to top off. They want to keep that mix fairly good overall. So very, very good model from that perspective. I like Chewy a lot. I've not really done a deep dive on any of the other Bark or Petco, But of the models, I think Chewy has the best valuation and the best model. So very good growth, very sustained growth. Long-term margin exists. They're going through the little bit of challenge from a stock perspective, but long-term, this is going to be one of the retails that you want to keep an eye on. That's Chewy. Now, what we're going to do is to quickly go through I'm actually going to start doing it from now on. I'm going to go through the fundamentals and the technicals as well. A lot of people don't want to see it. They don't want to see it. It's right here. Okay, Chewy is about 7 billion. So this is much, much lower. 7 billion easily, they can easily get to a 50 billion. I think 5 times this, what amount of time? That's probably debatable, but let's assume that happens in about 5 years. So annualized revenue, we already saw it, 2 billion in revenue 2017, dramatic growth. Look at this. During the COVID timeframe, just grew dramatically and now back to the 10% growth. You want to get a little bit higher than that. 11 billion, they can easily get to 22 billion. So this is actually valuation-wise, this is very, very good. They're profitable. They've actually been profitable for the last couple of years. And gross margin, as we talked about it before, is in the 25% range. Yeah, almost 30% range, 25 to 30% range. Net margin much, much smaller. In the 1% range, they want to get to the 10% range. They actually 10%, they've got to about 5 to 10% margin, net margin on a quarterly basis. Growth is now slowing down again. That's not a good sign. You want to be this in the 10% range at least. Balance sheet, total assets about 1.8 billion in current assets, total debt about manageable, half a billion, sorry. Cash flow is manageable as well. From a valuation perspective, this is a little bit high. The price to earnings is a little bit high. They probably get to the 50 PE, 22 billion, about 2 billion in net earnings in about 3 to 5 years. I can easily see them getting to about 25 times PE. So PE being that, about 50 billion, that means they should get from 7 billion to about 20 billion, even if they get lower PE. Still a very good valuation, I think. I think the big challenge for them is the fact that everybody thinks that they're going to die or get killed by Amazon. I don't think that happens. But just to give you context, that is one of the biggest questions that Chewy is facing right now, an existential threat that whether Amazon is going to eat their business. I don't think that happens having been at Amazon, but okay, the stock on a monthly chart basis is really at its all-time lows at 16 or whatever. The all-time low is about 14, so about a little bit higher than the 16. So this is a decline. It's actually basing more than anything else. This is just building a base on the long-term basis. Okay, let's go to the weekly chart now. Weekly chart still building a base. So this build a base, stage 4 markdown. Now just building a base. I wouldn't call it any more than building a base. And it still continues to build a base. Actually, on the shorter term chart is actually going down. So look at that. This is actually stage 4 decline still. It's moved it a couple of different times. No, it's still, I wouldn't call this. So this is what that looks like. What it's done really is this is going down, whereas this is remaining flat. So it's trying to make a move back up. On a daily chart, I see it going down to a certain extent, a little bit more. The RSI is going down. MACD is mostly flat to slightly going up. I think it might retest. Actually, it's retested this a couple of times. This should head a little bit higher. They should go from the 16 at least to where the resistance seems to be. The support for it, as I mentioned, in the 14 zone. Resistance for it definitely here in the 18 zone. It should move back up to 18 again. That's where I think it actually heads up in the short term. When is earnings? Next earnings is on 29th. So by earnings, it'll probably be flat, mostly in the 16 range. I expect after a decent earnings, it actually should head back up to the 18 range. That's it for Chewy. Let me know what you think. Please subscribe to my channel. And if you want to get more details, go to my website at mukundmohan.online.